Hello guys, good morning, good afternoon, wherever you are watching me from. I wanted to listen to this video. After listening to this video, we're going to reason together, and I promise you I'm going to do a very detailed video that is basically going to explain everything that this particular person was trying to put across. So guys, let's listen to this.
Stick to one very simple rule to improve your results immediately. Only buy when you are below the opening price and only sell when you are above the opening price. If you find a really good buying opportunity and you are not below opening price, do not take the trade. The trick is understanding how candles work. They open, and in a bullish environment, they're likely to come lower first, preferably into some kind of point of interest area. And once price is rebalanced into that area, it is likely that price will respond and then push to the upside, which from a candle's point of view will leave behind a wick. Your job is to try and get in the market anywhere under opening price inside a higher time frame point of interest area. So in this example, price is bullish. We can see an order block, which is also within our discount zone under opening price. So this opportunity here would have been the perfect trade opportunity. And you're basing that around the fact that you are under the candle's opening price for that day.
So guys, basically I have tried to really listen to this video. It's a very productive video, but it can be very tricky when it comes to beginners. You know, most of the times we say the candle closing above and below, and most of the times we say when it closes below, that's when you're going to sell. When it closes above our point of interest, that's when you're going to buy. But in this case, it is actually different. How is it different? I would love to tell you that he's actually paying attention on a daily candlestick pattern. That's what I actually tried to weigh me as an individual, okay? So when a candlestick opens on daily time frame, you're supposed to highlight that level. Not like your support and resistance, but as your point of interest where you're supposed to watch the market from. Just draw the line. He didn't actually emphasize on the time frame, but I think, and I can actually tell, daily time frame is the one that is so productive when it comes to this strategy, because you're going to look at the opening and closing of that candlestick pattern. Remember, on daily time frame, we have one candlestick pattern that actually shows us what happened on that particular day, right? So guys, when you see price, you understand me? When you have drawn your opening price, basically it is actually demonstrated right there, and I will put it on the screen right here so that you can see. When you see price being above your opening price, that's when you're supposed to sell. You understand? It's actually very tricky. That's what I said when I was actually starting this video. It can create confusion. And that's what, remember, we are actually looking for a buying opportunity when price is actually below our opening price. Pay attention on the daily candlestick pattern. He's actually using the Fibonacci retracement tool. It's actually a very great tool showing you whether you're going to take your trades or not, because we do use a retracement. We actually look at the above and the below level. You understand me? When it is actually below certain level, you're supposed to buy or sell. So guys, this video was very shallow because I wanted to show you, or rather to make you listen to that video. I'm going to do a very detailed video to actually explain this to you step by step. So make sure you subscribe to this channel, make sure you like this video, and so guys, turn on your notification bell, because a lot more is coming in this channel where we'll be actually looking at what many traders are basically talking about, different strategies, because I've had many strategies. I've had about order blocks. I've had a lot of strategies, but I felt like this one was kind of different from what I've had, and that's why I decided to actually pay attention on it. So guys, I hope this added some value to you. If you would love to listen to this video, I'm actually going to make it start right from the start at the end of this video. So basically what I wanted to emphasize is how you're supposed to look at it. As per what I understood, he's actually paying attention on those levels as their point of interest so that they can determine whether to buy or sell, okay? And as you have seen, he's actually also using the order blocks to actually look for the key level, okay? So guys, let me hope this video added some value to you. Basically, I'm going to do a very detailed video explaining this and more. Mercy Christina here. Subscribe to this channel, like this video guys, and so I'm going to do a very detailed video explaining about that after I test it, after I see it is working. But basically, this is an important point to know. Bye guys, see you in my next video. Thank you.
Stick to one very simple rule to improve your results immediately. Only buy when you are below the opening price and only sell when you are above the opening price. If you find a really good buying opportunity and you are not below opening price, do not take the trade. The trick is understanding how candles work. They open, and in a bullish environment, they're likely to come lower first, preferably into some kind of point of interest area. And once price is rebalanced into that area, it is likely that price will respond and then push to the upside, which from a candle's point of view will leave behind a wick. Your job is to try and get in the market anywhere under opening price inside a higher time frame point of interest area. So in this example, price is bullish. We can see an order block, which is also within our discount zone under opening price. So this opportunity here would have been the perfect trade opportunity. And you're basing that around the fact that you are under the candle's opening price for that day.
But before that, listen traders, before you make any big mistake, like paying for that expensive course, try reading this book first. This is basically what you are going to be taught by your mentor. In fact, not even everything. If you are a beginner and you have learnt only basics, don't dare funding your Forex account because you will not like the results. This book will introduce you to another side of Forex trading because you cannot like forever buy at support and sell at resistance. This book comprises of everything you need to know about smart money concepts and price action, and everything is explained simply. Grab your copy at $10 only and it will save you from a lot rather than paying for those so-called Forex mentorship. You can make payments via PayPal, Binance USDT, M-Pesa and SendWave. Look for payment details on the description of this video. Send your receipt and you will get your copy. First come, first serve.
Stick to one very simple rule to improve your results immediately. Only buy when you are below the opening price and only sell when you are above the opening price. If you find a really good buying opportunity and you are not below opening price, do not take the trade. The trick is understanding how candles work. They open, and in a bullish environment, they're likely to come lower first, preferably into some kind of point of interest area. And once price is rebalanced into that area, it is likely that price will respond and then push to the upside, which from a candle's point of view will leave behind a wick. Your job is to try and get in the market anywhere under opening price inside a higher time frame point of interest area. So in this example, price is bullish. We can see an order block, which is also within our discount zone under opening price. So this opportunity here would have been the perfect trade opportunity. And you're basing that around the fact that you are under the candle's opening price for that day.